Good morning, this is Wayne Bilal with another Smart Profit Maximizing Moment. We've been spending a lot of time on life rafts, life lines, things we do to try to save our business, to keep it up afloat. Like I used this analogy before, and I'm going to use it again. What COVID-19 did to businesses is like you're on a boat rocking along real fine and you hit a reef, all right? Boat's starting to sink, you've got thrown overboard, you're in serious trouble. That's kind of what happened. We got 36 million people that filed for unemployment. That's twice, that maybe is, as a percentage, it's lower than what was in the Great Depression. People are messing around with figures, but it is the highest we've ever had. And it's twice what we had in the 2008, 2010 last recession we had because of the banking crisis. So, I mean, this is huge. Now, how many will go back to work? I don't know. Most will, I think, if we can start getting back to work, all right? Slowly but surely, most states are, but some states are just keep delaying it. And the longer they delay it, the worse this is going to be. And the more businesses won't come back, which means the more people will stay unemployed. I was thinking 8 to 12, might be more 10 to 12% is going to be where unemployment is. Just because the world's having a recession doesn't mean you need to. I have watched during other recessions. It's the advantage of having white hair and being old, is I've been through other recessions. Now, this one's different. We're closed. We need to get reopened. But once we're reopened, we're going to have a year to 2 years worth of coming back. All right, but with the right governmental policies, and it looks like we're going to have them at the moment. It seems like, things are put in place to help businesses survive. We should be fine. All right, we should make it back. But one of the rules I do for my coaching clients, and I'm going to say to you, is just because the countries in the world is having a recession doesn't mean you need to participate. You need to be creative. You need to be cautious. You need to work in your business to save it and to move it forward. All right, it's as simple as that. Cash is king. One of the easiest and quickest ways to increase cash is to cut cost. Now, we're going to go through this. I'll say truthfully, increasing sales is important in any profit enhancement plan. And we're going to be spending, I'll go back if I have to, if something new comes up and talk about, EIDL loans and PPP loans and retention tax credits and all that garbage. I'll go back and talk about them, all right? But I may or may not cover them. I don't know, all right? So, only if something comes up. I want to start going forward and talking about how to keep your business afloat. We're going to start with the basics, which is how to increase profits, how to perform a cost-cutting audit, okay? Increasing sales, like I said, is important, but cost-cutting cannot be left out. If you're operating at a 10% margin, in other words, I sell something for $100, after all my cost, I'm making $10. A dollar saved is equal to $10 sales, all right? That's important. In order to achieve lower cost, you should perform a cost-cutting audit at least annually, maybe quarterly, but at least annually. First, you sit down and get with your accountant and look at your last financial statement, whatever, and find out what your biggest costs are and your biggest cost centers, all right? Use these cost centers to allocate the remaining costs. Once you categorize your costs and understand the relationship to your business, you can implement cost-cutting. All companies attempt to do cost-cutting, but they really fail, all right? What really tends to happen is that they just nibble around the edges, all right? So first, I really have 3 rules for cost cutting, and we'll get into this in more detail when I'm going to spend some time on cash management. All right, first, make cost cutting a continuous activity, constantly. Most companies have cost-cutting drives at intervals of several years, in general only during business downturns. In between, only a token effort is made to run economically. You can win big by having all your managers work on cost-cutting every day. Require a written report on the progress on cost reduction every quarter by your managers, all right? If you're a lone person, you do it yourself. Sit down and, what am I doing, all right? Schedule it. I mean, I'm serious. I schedule the time to review and see if I can cut costs. This not only reduces problems in bad times, but can substantially increase your cash flow during boom times, which gives you the reserves to handle downswings, all right? I got businesses that are going to fail. There is absolutely no doubt about that, but these are businesses that were in trouble before, all right? The best way not to fail is to have the reserves you need. Get with your banker, see what they expect you to have. It's not a bad rule of thumb. all right? 3 to 6 months reserves of overhead to help, all right? Doing this constantly is a much more efficient way to cut costs. Crash programs, where I have to cut what I call survival mode cuts, all right, tend to result in process hangups and quality problems because the measures taken are not thought out and are implemented in a hurry. Continuous cost cutting gives you the opportunity to carefully test results and avoid false economies. Remember, the goal is to cut costs without affecting customer relations, without the customer realizing you're cutting cost. All right. Now, I'll be honest, in today's world, if I'm running a restaurant that's closed and I'm doing takeout, let's be honest, takeout is a little more expensive for a restaurant. I can't rewash the plates. I'm using something new every time. All right. So, the cartons, the containers, the utensils, everything costs a little bit more. And you might be able to pass that on to the customer, but when there's 36 million people unemployed, probably not. On top of that, a lot of those people are no longer buying out. So we're going to have to readjust how we look at things, but you want as much as possible not to cut costs in a way that actually affects your relationship with your customer. Cut major costs first. This seems obvious it seems obvious because that's where the money is. Unfortunately, I have been in countless meetings where cost cutting applied to as little as 1% of the total cost. Be creative. Look for ways to cut costs that don't affect efficiency or reduce your product's quality. I've sat down and seriously saw people, all right, every business I sit down and look at, 70 to 90% of every dollar that goes out is in labor and material, items that go into cost of goods sold, let's say, all the materials, supplies, everything. All right, but they'll spend time getting bids for insurance, which is fine. I'm not saying don't do that. Or cutting telephone costs. I'm not saying don't do that. Matter of fact, one of the things I tell people to do, the easiest, quickest way, is look at everything that's hitting your bank recurring and kill it. One of the things that if you're in serious trouble, just kill your credit cards. Call up the credit card company, call the bank, get the ATM, and just tell them, I lost my card, I need a replacement. When you get the replacement, people will call you and you make a decision at that point if you need it now where you're at, okay? But cut the major things first. We're going to spend a lot more time in the future on this because this, let's take cost of goods sold material. Let's say it's running 50%, all right? That means if I'm doing $1 million company, 500,000 is literally going to cost of goods sold. If over a series of various things, I can increase my profit margin from 50% to 60% or cut my costs from 50 to 40, that's 10% of $1 million. I just put $100,000 in my pocket without making a single sale. Now, then go out and sell more, and we have increased our margins so that we get a better return for our buck for our advertising and marketing efforts, okay? The third thing we do, cut costs by eliminating, not reducing, activities where you can. As you examine each cost and cost center, the first question you should ask is, can we get rid of this entirely? The answer, of course, is going to be no. Of course not. We can't get rid of it. It's there for a reason. You can jar your people out of this by rephrasing the question like this, and yourself out of that, okay? Okay, suppose we were forced to stop doing this function. What would we do instead? And would it be cheaper and more efficient? Don't even consider your options for reducing the cost of the activity until you have convincing evidence that it's impossible to eliminate it altogether. Let me give you a personal example myself, all right? 2 years ago, I got rid of all bookkeeping. It was in 2018, so yeah, 2 years ago. Beginning of 2018, we stopped doing internal bookkeeping. In 2019, we stopped doing any payroll work, all right? We didn't abandon our clients. I arranged for bookkeeping firms, a couple, to take up the slack on that. And I talked to every single one of my clients, passing that on. In the first year, our top line went down by $40,000, but my profits went up by $80,000 because I literally was able to get rid of half of my staff. I'm still doing bookkeeping work. I'm still kind of supervising a little bit. It's just not my staff. It's the bookkeeper's staff, all right? The second year, sales increased by about 60, I'm trying to remember the number, 60 to 70,000, and profits were over the 17 base year. Well, yeah, 18, 19, yeah, the 17 base year, profits were up over 100%. Easy, okay? So what it really comes down to is that now that was a tough decision for me. I'm going to be honest about it, because all CPA firms offer some sort of bookkeeping service, so it was like, not sure I want to go there. Right? So we made a decision not to take it any further, and we, said, okay, we're done here. And just what it allowed me to do was to spend time with my better customers, giving them more value added, like these videos. So when you're doing cost cutting, rule number 3 is eliminate and reduce. All right? Eliminate before reducing. If you have something like, I can't get rid of tax work. Okay, see if we can cut our costs by being more efficient. Okay? Hey, until next time, this is Wayne Bilal saying, let's remember, even in this recession, let's make the next 12 months our most profitable ever. Thank you very much.